FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 5/13/19. Hey, as always, well, you're about to hear a roundtable. I think you're going to find it fascinating. Different perspectives, always good. We try to do at least one per week. Hope you're enjoying them, and email us with any questions or comments. Be a part of the show. Email address is kl@kerrylutz.com. Well, without further ado, we see things taking place in the markets around the globe, around the world, and it makes you wonder about metals, about what's going to happen, currency, gold, stock markets, economy. With us now is our good friends, John Rubino, dollarcollapse.com, and Andy Schectman over at milesfranklin.com, by far the most reputable and most regulated bullion dealer in the nation, if not the world. And without further ado, hey, Andy, it's good to have you back on. Haven't spoken to you in a while.
Thank you, Kerry. It's always good to be part of what you're doing. I appreciate it.
Hey, and John, we're ready for our weekly get-together here. So, hey, John, first question here is the economy. I mean, unemployment. We just have this great jobs engine in the United States. It's like anyone who wants a job can have one. Anyone who doesn't want one can have two. So what could possibly be wrong with the world?
Well, hey, Kerry. Hey, Andy. It's late in the cycle. You know, we're back to what normally happens 5 or 6 years into a recovery. This time it took 10 years, but we're there. Where now, we're at the point where we're getting these really funny stories about what companies have to do to hire people. That's how you know it's towards the end. And then this time around, you hear about companies going to high schools to recruit, or going to the local jail and setting up a booth, you know, and catching the guys as they get released and trying to hire them. That's how tight things are in a lot of different industries. What that means is that wages are going up, and the other perks that don't necessarily feed into wage inflation are also expanding. The Wall Street Journal just did an article lately about how companies are not only raising wages, but they're also redoing the bathrooms in their factories and things like that. So people have, and giving people flex time in factories, which is highly unusual. Usually you kind of have to work your shift, but now you can pick days off to have long weekends, and you can come in earlier or later because they have to do that in order to keep good workers. What that means for the macro economy is that wage inflation is going to go up now, and corporate profits are going to start to diminish. That's usually how it works at the end of a cycle. You see wage inflation going up beyond the Fed's target, which forces the Fed to raise interest rates, and you see corporate profits shrink relative to what they were in the boom years prior to that, and that affects stock prices. So we're headed for something like that, unless something gets in the way, which takes us to the trade war. That might short circuit this whole thing.
So I've got a place.
Seeing that today.
I got a place where they can go get all the workers they can handle. They need to set up, especially here in Florida, at substance abuse, AA meetings, and drug rehab centers.
Oh, well, that's part of the reason that the labor market is so tight is because you have this huge section of the country right now of working age people who are opioid addicts or whatever, and so can't really be hired.
Sure, they can.
That's part of why you get this weird thing where the labor force participation rate is low, but employment is high at the same time. So that's one issue.
Hey, well, those guys can always be air traffic controllers, right? I mean, what could possibly go wrong? Or they could direct traffic. Opioid addicts are directing traffic. So, Andy, your take, what are you seeing in this dream economy here?
I think it's interesting. We talk about a dream economy at a period of time when we have record corporate debt and record individual debt and record student debt and record auto debt and record credit card debt and record state and municipality debt and unfunded pensions and public in the public and the private sector. And all of this dreamy economy, no one talks about the fact that in fiscal year 2018, the U.S. government's total net loss was $1.16 trillion. So, if this is supposedly the good times, what happens when things slow down? I found it rather interesting in glancing at the government's report on the state of affairs to find out that we have assets as well in the United States. In fact, we have assets totaling $3.8 trillion. You fellas know what the largest single asset is in the United States right now, according to our own government?
I know exactly what it is. It's land, because they own half of the Wild West.
No, it's not. Believe it or not, it's horrifically $1.08 trillion in student debt. That student debt is greater in value than every piece of land in the national parks and every aircraft carrier and bullet in the military. It's horrifying to think that this is supposedly a good time.
That's an asset. Asset. Hey, we've mortgaged the souls of our millennials and Gen Z so that they could get useless degrees and be exempted from the job market. And then they can go gripe about it and tell us what a lousy job we did, us baby boomers. Can't complain. You can't really debate what they're saying. We did a lousy job as raising children from the boomers. That's John and my generation. You're kind of an Xer, Andy. But, so that's what we've got in our economy. It's this kind of chimera, a false impression, an illusion of everything going well, an economy hitting on all cylinders. But we know that not to be true. So then the question is, well, the stock markets are kind of like the validation chamber. They're the echo chamber that says, yes, see, the economy is so good because if it wasn't so good, the stock market wouldn't be doing well either. But what do you say about that, John? Well,
you can simulate good times by borrowing money. It works the same way for a country as it does for an individual. If you max out a bunch of credit cards and buy a bunch of stuff, it looks to your neighbors like you're doing well. And you feel like you're doing well because you got all this cool stuff that you just bought. But that debt has to be paid off eventually. And that's where we are now, basically as a global financial system. Not just the U.S., but the whole world has spent the last 30 or 40 years borrowing insane amounts of money and buying stuff with that money, which makes them look way richer than they are. Right. But we're coming to a point where the numbers are so immense that we really can't continue borrowing money to cover our old bad debts. And when this blows up, it's going to be epic. It'll be something that historians will be writing about for the next 100 years because we've never tried this before on a global scale. Lots of countries get into trouble by borrowing too much money and trashing their currency, but it's always in the context of a sound money world. Now, with everybody having a fiat currency, which is to say an unlimited credit card, we're all making the mistakes that prior hyperinflation countries made heading into their hyperinflations. But we're doing it in a coordinated way. And that's what's unique about this time. We've never had a world this awash in debt, which is rapidly turning into bad debt. So the next recession is just going to be fascinating from an economic theory standpoint because we're heading into it. And in the next year or two, we'll probably tip into a recession, no matter how good things feel right now. But we're tipping into it with interest rates at negative levels in a lot of major countries already, and at only 2% and change at the short end of the spectrum for the US. So when we have to start cutting interest rates to bail ourselves out of this debt mountain, we're going to have to go to deeply negative interest rates, and not just in one little pocket or two little pockets of the global economy, but the whole global economy is going to have negative interest rates. And that might encourage people to take on a lot of new debt and give us the illusion of prosperity for another few years, or it might blow up the global financial system. We don't know. That's what's so interesting about this. You can't tell whether we have one more crazy debt cycle or whether this is the end. And those are two very different investment theses. So it makes it really hard to manage your money in a world like this where we could bifurcate. We don't know which direction we're going to take, but we know that one of them is a complete disaster and another one is eventually a complete disaster. So which makes gold and silver look like must-own assets for people because they protect you.
Well,
stuff like
that reminds me of Yogi Berra, who once said, when you come to a fork in the road, take it. And I guess we're going to be taking it. Andy, what's your take on the global economy? Things with green shoots all over?
I think what John was saying is right on, but it's important to note that all of this debt accumulation has happened with the lowest interest rates literally in the 5,000 years of human history. And but on top of that, nearly every single major asset class in the world is overvalued. You look at the U.S. stock market and look at the price to earnings ratio, which of course is the measure of how much investors are willing to pay for every dollar of the company's profit. And basically, it's never been higher or very, very, very close to it. And just about every other metric that you would use to value the stock market, price to book or adjusted earnings, they're all at their absolute peak on top of corporate debt, maxed out. When we talk about over $10 trillion in negative yielding bonds, almost 25% of every government bond worldwide negative yielding. It's absolutely ridiculous. And the idea of making a loan is to enrich yourself. You make a loan not to lose money. You make a loan or buy a bond in an effort to make more money. And when you talk about instead loaning at negative interest rates, it will end very, very badly. Even if you talk about countries like the United States, which you're supposedly getting some money in return, when you factor in taxes and inflation, it's negative. And, it's for a market-based economy like ours, this is very, very, very bad because savings and investment are the real source of all economic growth and of capital investment. And so when we look at all of these numbers, I am always a big fan of falling back on what Chris Powell has to say. There are no free markets anymore, just manipulation. So much of what we are seeing is illusionary, based upon a mountain of debt with skewed numbers coming out of the Bureau of Labor Statistics and a bunch of hope. And I think the stock market is hope. Precious metals are a hedge. And I think if you're concerned about what the hell's coming down the pike, whether it be politically or geopolitically or economically or even morally, based upon what we're seeing here with the kids growing up nowadays are maybe not so much in touch with what's really happening. And I think that going forward, if you're concerned about where we're heading and about the numbers that we're facing, then to not have a percentage of precious metals in your account is absolutely crazy. There's an interesting study I just wanted to mention real quick for the people out there who are stock enthusiasts. It's a study that was done a couple of years ago, but I've been really harping on it lately. Is the study from a group called Ibbotson, and Ibbotson is a division of Morningstar, which is the largest financial research company in the world, and they came out with a study not too long ago, which basically shows that gold and silver, platinum, and palladium combined in a grouping of precious metals represent the greatest negative inverse correlation to the stock market. So to the U.S. stock market. So I guess the bottom line is when you look at a stock market at the highest level based upon every metric it's ever been at, with corporate debt at the highest level it's ever been at, with interest rates at the lowest level they have ever been at, based upon all the things that we have floating around us. The folks at Ivinson will tell you that a 7 to 15% allocation to precious metals in any portfolio will decrease volatility and increase profitability. The bottom line is that stocks are a hope and precious metals are a hedge. And it's very, very, very important right now to realize that a lot of the numbers that we are looking at are skewed and they're manipulated and they're make-believe. So I think more than ever, Carrie and John, more than ever, an allocation to precious metals, not as an investment, but as wealth and insurance against the falling U.S. dollar, the falling stock market, never been more important.
Well, gold is doing what you would expect it to do today, and what we buy it for. Stocks are tanking, and gold is up. What is it, $10 or $12 an ounce right now? And that's how it behaves in scary times. When people are worried, they go back to something that they can count on, which has held its value for 3,000 years, et cetera, et cetera. All of Carrie's listeners know the gold story, I think.
Right.
And it's nice to see it play out.
If they don't, that means they just started listening yesterday. But even then, they should have gotten some kind of idea of what it is we talk about here and why we don't just love gold for the sake of gold, although there's a lot to like about it, for sure. But what we're about is history and about seeing cycles that repeat themselves over and over and over again. We've seen it so many times, guys. We're all historians to some extent, right? And
the more afraid people are, the more they tend towards safe haven assets like precious metals. And we've created the conditions, not just in the U.S., but all around the world, for people to be very scared at some point in the not too distant future. The short term is unpredictable because we have so many things that can spook the markets and or elate the markets. For instance, if they announce tomorrow that China and the U.S. have cut a trade deal, the Dow will be up 1,000 points within minutes of that announcement, and gold and silver will probably go down. But the underlying financial realities, it doesn't matter whether we have a trade deal with China or not. We're still taking on immense amounts of debt that will blow up on us. And that's the kind of thing that will terrify people and send them into precious metals at some point.
Mm-hmm. No doubt. No doubt this is the case. So, Andy, we talk a lot about the powers that be and how these markets get manipulated and really the powers that be have their way with them whenever they feel like it. We coming to an end of this here? The fundamentals eventually prevail, or do we just keep going through this and going through it?
It's interesting right now, and when we talk about powers that be, there's one power really, and it's J.P. Morgan. They're the ones who control everything. Right now, they are maybe the most bullish, at least from an outward position, that they've ever been. They are actually long in the futures market on top of over 20 million ounces accumulated in physical gold and over 900 million ounces accumulated in physical silver. It's the largest physical silver position the world has ever seen. By and large, it's the largest total metals position the world has ever seen at one time. And we owe that sleuthing work to Ted Butler, who's done a masterful job at evidencing it. They have used the paper price as a tool of misdirection to allow them to accumulate and corner the world's supply in precious metals. Now, so many of these accusations have been lauded as being conspiracy, but it's really not conspiracy any longer. In fact, right now, the Justice Department has just for the second time delayed sentencing on a J.P. Morgan trader who is facing 30 years in prison for admitting to manipulating the metals prices, spoofing the market, as it's called, has implicated his senior staff and has turned state evidence. This is now 60 days that they have extended two 6-month extensions that they have extended the sentencing of this fellow. In both cases, they say they are digging deeper into the manipulation of the market. But really the bottom line is, Carrie, is that when you take a look at who's accumulating, in the last year, the central banks of the world accumulated more gold at any time since 1971. Most gold they've accumulated in 50 years, they did last year. And when you see the most sophisticated, well-funded, well-informed traders on the globe, the commercial banks and the central banks, amassing positions like JP Morgan is, and like Russia, and China, and India, who accumulated 32% of all silver mine supply last year, Kazakhstan and Turkey and Iraq and Iran, the gold and silver is flowing eastward. And as far as I'm concerned, the people that are accumulating it really aren't the ones who are too concerned about a manipulated price. And when that changes, it'll happen so fast, it'll happen overnight. It'll be like Bitcoin was in 2017, when the price just continued to move higher and higher and higher and higher exponentially. But it'll be based upon a tremendous amount of acquisition by powerful money centers that no one really knows about and hasn't been paying attention to. And so the bottom line is, I think that the acquisition that has been under the radar screen because people have been misdirected by a price that doesn't deem them to look any closer, you will wake up one morning and find that the prices have gotten away from everyone. And I think that's what we're seeing right now is a steady, slow accumulation by the most sophisticated, well-funded traders in the world. And when the price changes, when the COMEX, like for example, right now, the COMEX market is a farce, but the people who are accumulating aren't complaining. And a perfect example, you don't have to look any further than the July silver future contract right now, which is in full-blown backwardation, with spot silver trading at a premium to July silver. That completely evidences that the COMEX market is a farce. And this is being done as insiders are acquiring physical silver for their own books hand over fist. Again, remember, 900 million ounces that Morgan has accumulated. That's 9 times what the Hunt brothers tried to buy. They've accumulated all this silver in 6 years as the price has been held down. So you have a company which has a senior trader who's facing 30 years in prison, who has admitted to the Justice Department that he has been spoofing the market for a company that has been pushing down the price of paper to the largest degree. They're the largest short seller on the market. And by the way, do you guys know that they accumulated all this silver starting in 2008 when Bear Stearns went bankrupt? It was a deal behind the scenes, which was brokered between Hank Paulson and Jamie Dimon to take over Bear Stearns' short position. Now, here's the amazing thing. In the 11 years that they've owned that short position, and the hundreds of thousands of ounces, millions and millions of ounces that have been traded, they have never lost a penny, not one. It is a mathematical impossibility. They have a perfect trading record. That's like a batter batting 1,000 in the major leagues for a year. It's impossible. Yet they have found a way in their short book to never, ever, ever lose one penny on even one trade. And then over the last 6 years, they've decided to accumulate 900 million ounces of silver. And yet Ted Butler is the only person who talks about it. I do when I publicly speak, but next to myself and Ted Butler, nobody talks about it. And as far as I'm concerned, it is the most relevant piece of information guiding the silver and gold market there can be. When the most sophisticated, well-funded, well-informed, influential group of traders in the world, under the cover of manipulated prices, ignored by the CFTC, is acquiring the single largest physical position of metals in the world, I think it bears watching. And, misdirection, the no-look pass, is very, very, very pervasive. And maybe the biggest problem people make is trusting their lying eyes and not listening to their gut long enough. But if you take a look at what's happening around us, with everything being full-blown overvalued, with everything going crazy geopolitically and politically, with the world crazier by the day and the most sophisticated traders on the globe quietly loading up on precious metals, when Social Security comes out and says in 15 years it will be completely busted broke, when the largest holder of U.S. government treasuries is the Social Security Administration. This country is in big trouble down the road, period. Mathematically, there's no way around it. 1 trillion seconds ago was 31,688 years ago. And the government will tell you they have almost 200 trillion in unfunded liabilities. Social Security being at the top of that list.
Yeah.
And for people not to own precious metals as a hedge against the craziness around us, not looking at it as an investment, but as a life raft, when the most sophisticated traders are doing it beforehand, behind the scenes, I think it is a monumental mistake, and it is a buying opportunity of a generation to save your ass. Bottom line, that's how I look at it.
All right. And John, just parting words here. If not now, when is this thing going to happen? What is the timetable for all of this? There must be a timetable. These people aren't stupid. And I'm looking now. Gold is trading right this moment, according to Kitco, bid 1299.30, ask 1300. Looks like we're about to cruise past that 1200 mark again, 1300 mark again.
Well, I think the timing is impossible to predict in say year ahead increments, because there's so many cross currents out there. We don't know what's going to light this fire. But I got to say about JP Morgan Chase, they have a really interesting role to play in what's coming, because among sound money people, they are the most hated company, or they're right up there with Goldman Sachs as the two most hated companies in the world, in part because it appears they've been manipulating silver prices lower over the years. But that might change pretty soon, where they start, because now it's in their interest for silver to go up, they might start manipulating silver upward.
Yes.
And then we're going to like them. We're going to be saying, yeah, go Jamie Dimon. Good old JP Morgan Chase made us another, $5 an ounce of silver today. So it could be that JP Morgan Chase becomes sort of a hero in the sound money community pretty soon, because they're driving up silver. But to go back to timing, when they do this, when all the other stuff happens that sends precious metals through the roof, I think is completely unpredictable, because the central banks of the world still have ammunition. They still got the ability to manipulate markets at the moment. And when things really take off for precious metals and really turn south, the global financial system as it's currently configured, is when we recognize the central banks don't have any tools left. In other words, they do something like cut interest rates to negative 2%, and it doesn't work. It doesn't ignite a borrowing boom and send the economy back up again. And in fact, it ignites the opposite. And when that happens, that's when terrified money pulls out of financial assets and moves into real assets. And we can't know whether that's this year or 5 years from now, but I think it's very safe to say that it's coming. And a lot of it has to do with politics in the U.S., for instance. We've got really chaotic politics, obviously, but we also have Trump aiming at a deal with China, which will make the financial markets feel a lot happier when that comes, to coincide with the 2020 presidential election, because that's the timing that he would really like. And he has some control over this process. So we could have this, tumultuous few months when the trade deal is scaring the hell out of everybody, followed by an announcement of a deal which sends the markets through the roof again, followed by bad stuff, because then we're out of ammo. But in the meantime, it's hard to tell what's going to happen timing-wise, because it's up to people who have agendas that have nothing to do with the economy. And we've got the 2020 election coming up, which gives kind of a framework. Governments always try to increase monetary ease heading into presidential elections, and this time should be no different. And it usually works, but this time it might not. So you really can't say anything about what's going to happen this year, which means that if you're a precious metals investor, or really any kind of investor, you want to be dollar cost averaging in or out of whatever you're dealing with. Like if it's gold and silver, you want to be buying a little bit each month and just let your position build up so that you're ready when the time comes. And if you're in equities and you have a lot of capital gains embedded, you want to be selling out of those things now, because at some point, they're not going to be good things to be in anymore. We don't know if it's this year or next year, but you want to be taking steps that aren't emotional and aren't dictated by the headline of the day. So you want to be on a regular program of shifting your finances away from financial assets and towards real assets, on the assumption that you may not be all the way there when it hits the fan, but you'll be most of the way there with any luck.
Gotcha. All right. Well, hey, we're just about through for now, but I guess if you want more info, take a look at John's site, which is dollarcollapse.com. Take a look at Andy's site. You can call him up, milesfranklin.com. And of course, we're always here for you, kl@kerrylutz.com. Hey, Andy, really appreciate your connecting with us today, and it's always a pleasure.
Kerry, thank you. I'd like to thank you as well, John. I appreciate your insight. I'd like to leave your listeners with one last thought. In the 30 years I've done this, I have never, ever, 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 not even remotely close, seen numismatic gold coins where they're priced right now. You can buy uncirculated $20 gold pieces, certified mint state 62 or 3 grade, for the same price as a gold eagle. It wasn't more than about 7 or 8 years ago, I was flying all around the country paying people 70 and 80% premiums for those coins, swapping them into bullion. The tide has reversed. It is the best value I've ever seen in my entire career as it pertains to gold. So if anyone is interested in checking that out or talking about trading bullion for these numismatic coins at levels I have never seen, never thought I would in my entire career, it's as unusual as 4 feet of snow in the Florida Keys. That's how unusual these prices are. Please feel free to email me at Andy@milesfranklin or give a call anytime, 800-255-1129.
Hey, and I can tell you, I live in Florida and I've never seen any snow in the Keys. That's for sure.
That's unusual, it is. And I do mean that.
Hey, and John, hey, really appreciate your coming on as always. And we'll be back for sure shortly.
Great.
So
Gold's back up over 1,300.
Okay, well, that's what we'd like to see, right?
Indeed. You guys take care. Thanks again, Kerry.
All right.
Thanks, Kerry.
Hey,
Thanks,
guys.
Andy.
Thanks so much.
Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.